Hey, you're watching The Dip, the best podcast on the internet to bring the biggest money stories to the US and the US to the world's biggest money stories. I'm Kassandra, and the year has just started, but a lot has been going on in geopolitics. Threatened US action in Iran, real US action in Venezuela, and we wanted to back up and look at how all of this affects oil markets, because these countries rely on that fossil fuel as a major pillar of their economies. Now, these are both situations that remain really fluid. I'm talking about Iran and Venezuela here, at least at the time of recording. But a bit earlier, I spoke with Carole Nahkle of Crystol Energy, and I started off by asking her about how unrest in the past has affected the Iranian oil market.
Well, what's happening in Iran is something that everybody is watching very closely because, yes, we have seen unrest in the past. If you remember the Green Revolution many years ago, and occasional unrest here and there. But today the situation is very different from what we saw before, primarily because of the changes in the region and also what happened elsewhere. And let me a little bit elaborate on that. So, for example, we saw in the last few years how the Iranian proxies in the Middle East have been weakened significantly. You have Hamas, you have Hezbollah in Lebanon, but also the removal of Bashar al-Assad, who used to be a very close ally to Iran. And then we saw the attacks by the US on Iran, let alone, what the Israelis have been doing. And also you have take all that into consideration, plus what happened recently in Venezuela, and the willingness of the US to intervene in a fertile environment whereby there is a strong appetite for a change in the system. So this is why I think today what is happening in Iran is not a repetition or a deja vu of what we saw in the past. It's different given its scale, its seriousness, but also because of Iran today and the situation in the region are very different from not long ago. And that by itself can highlight fragility of the Iranian regime today.
Are we seeing any fragility in the oil markets as a response, or how have the markets responded to what we've seen out of Iran so far?
I mean, interestingly, despite all the geopolitical instability that we are seeing around the world, and not just this year, but over the last few years, we can see that oil markets have been relatively calm. And there are several explanations for that calm situation in the market, but primarily that we have not seen any disruptions to supply. There is lots of oil around. Even OPEC itself, OPEC Plus, released more barrels last year. Still, we have strong growth from outside OPEC, led by the US, but also other countries such as Guyana, Norway,
Right.
Canada, and Brazil. And demand is not really booming. So that's something we should take consideration. It is growing, but supply is expected to grow faster. So for this year alone, there is a consensus among market observers that we should expect a surplus, which means that more supply than demand, and that should keep the lid on prices. But of course, things can change drastically if we end up having a sudden disruption, notable disruption in supply.
Yeah, we mentioned sanctions as obviously one financial tool used by the US and the West against countries that it wants to punish, frankly. But then there's also another favorite tool of the Trump administration, which is tariffs. On Monday, US President Donald Trump said that any country trading with Iran could face a 25% tariff on its commerce with the US. And it seems to be that that's trade in general, not just oil, but since oil and oil derived products are such a massive part of the Iranian economy, what do you make of this?
Okay, so first of all, let's think about the way you can exercise pressure on some countries. Sanctions is one of those tools, and it's called more like economic warfare. And then you try to use economic tools to put pressure on a country to create certain change, desirable changes. And in this case, the sanctions on Iran have indeed crippled the economy, but they did not result in a regime change. So how do you escalate the situation? You target the buyers or other countries dealing with Iran, not just for oil, but for other things. So definitely it may make countries think twice, but from experience, I don't want to be the cynical here, but China is unlikely to take those threats into consideration. They have been buying oil that nobody else wanted. Other countries also, despite the threat of tariff, they always manage to get around the sanctions because they are more driven by their own national commercial interests and getting oil and other products cheaply than, let's say, meeting Western agenda and priorities.
Well, with everything that's happened from the US and in the US in recent days, another country, Venezuela, has really fallen off some headlines. But let's remember that it was less than 2 weeks ago that the US attacked Venezuela and captured its disputed president, Nicolas Maduro. But Venezuela, it seems, is set to resume oil exports soon. What kind of volume are you expecting from that country?
First of all, Venezuela did not stop or has not stopped exporting oil
Okay,
even under sanctions. Because even there was exemptions, let's say for the Chevron license to still export some barrels particularly to
right.
the American refineries. And not all of the production was sanctioned. And again, part of the oil that was sanctioned was also being traded through OPEC routes using the dark fleet, which is a practice shared between Russia, Iran, and Venezuela primarily. Now, of course, if the Americans move on to lifting the sanctions and therefore legitimize the sale of Venezuelan oil, then we will see perhaps an addition in the barrels and the visibility, a better clarity, I would say, of the barrels that are being traded out of Venezuela, and probably an additional supplies coming to the market. But I wouldn't expect to see suddenly the market to be flooded. Because to increase exports significantly, you need to increase production significantly. And to
Right.
increase production significantly, you need to have significant increase in investment. And this is really the missing point, that it's not a question of opening the tap or closing the tap in Venezuela. I think for Venezuela, the problem is structural. It has been in the making for decades, and it
Right.
requires a lot of capital deployed within the country, plus a change in the legislation and the contract terms that companies are going to sign with the Venezuelan government. All these need to be put in place to see a serious change in Venezuelan oil production and therefore export. It is possible, but it will not happen overnight.
Yeah, it sounds like the tap needs to be maybe rebuilt from scratch here. You can't just turn it on.
It's
Um,
rusty.
it's rusty, exactly. I've heard some big numbers floating around on what Venezuela is capable of producing. I've heard some numbers like 2 million barrels per day, according to some. What's your take? What's realistic here? Could Venezuela be a big player in a few years or maybe a decade or two?
Well, let us use history as guidance. So long before Venezuela established itself as the largest holder of proven oil reserves, and despite the limited technology back then, Venezuela was capable of producing 3.76 million barrels a day in 1970. And that was the peak that was never reached after then. We got close to the number in the 1990s when Venezuela decided to open up to international investment. But today, really, it's less than 1% of global supplies, less than a million barrels a day. So, if you want to ask me about the scenarios, I would say Venezuela can perhaps one day produce up to the peak that it produced back in the 70s and even exceed that. And we saw that happening with Iraq, for example. But that can take a long time, and it requires, I mean, the Iraq war, the second war, 2003, and then to oust Saddam Hussein. Iraq, the first licensing round it held was in 2009, and then it took even after that many years for Iraq to really increase production, knowing that in Iraq the fields are perhaps easier and the quality of oil is different than in Venezuela. I'm not saying that the two countries are identical, but this just gives us an idea of the potential and how long it will take us to reach that potential. If, and there is a big if, investment comes back a big time, still we are not looking before 5 years at least before we see a notable increase in production coming from Venezuela.
It seems like since the US strike in Venezuela, that US President Donald Trump has basically just laid his cards on the table and said that oil was a big reason that his country launched these strikes. I'm wondering, when would we see you've laid it out quite clearly that it could be a long time between Venezuela before Venezuela can actually up production in a serious way. But I'm wondering how realistic is this desire, or how realistic is it that this desire will be fulfilled from the president, that potentially oil prices could come down in the near, or I don't know, maybe distant future?
Okay, so I'm going to separate between how much Venezuela can produce and one day, and then the impact on prices. And let me start with the latter, because today, again, we have to put with oil markets, we don't look only at one factor like, oh, Venezuelan oil or Iranian oil. We look at the overall picture. Many moving parts determine what happens to oil markets because they are global and complex. But if I want to keep it simple and I look at the situation of the market today, because it is a market that is expected to be in surplus, there is already a lot of supply in the market, much more than what we are seeing coming out of demand in terms of demand growth. Therefore, even if you put few barrels, additional barrels in the market, it doesn't have to be in the millions. If you put few hundred thousands, let's say, back in the market, even though in the bigger picture this is nothing, but because the market is already experiencing a surplus, that can put downward pressure on prices. Now, it does not mean that prices are going to collapse because maybe you're going to lose oil from elsewhere, or it could well even be that OPEC plus decides to revisit its strategy and withdraw some barrels from the market. So the impact on prices, yes, the risk today, if I remove the risk, the geopolitical risk from Iran, can be on a lower, like towards that, resulting in lower prices. But mind you, the situation in Venezuela could even get some more sour. That's another scenario you have to keep in mind, that it's not because you removed a president everybody's going to live happily ever after. I think there is a big risk of things turning nasty before turning better. So that's another factor that we want to consider.
I want to zoom out for a second and talk about these downward pressure potentially on prices to go downwards, because there was a note from the weekend from Goldman Sachs that said that oil is likely to drift downward this year because there's a wave of supply incoming. And I'm wondering, are you seeing this year that prices will come down? I ask just because a lot of Americans are wondering about cost of living, and oil is so related to expenses across the board.
Of course, I mean, in the US, the price of oil, I mean, it's almost everywhere, but primarily in the US, it's something very important. But yes, I mean, definitely we started the year, and even when you look at last year's forecast for this year, the general agreement is that we should see more supplies coming to the market because we are still seeing strong growth from outside OPEC. OPEC last year put a lot of barrels in the market, but they decided at the beginning of this year for their first meeting not to change their strategy before at least March, the first quarter of this year. Although all the indicators are good, but they also refer to a cautious approach. By the way, their meeting took place one day after the American actions in Venezuela. So we are in a mode of wait and see. But if I leave on the side the geopolitical risk, and that is a big card in the market, if I base it only on the existing market fundamentals of supply and demand, I definitely don't see prices changing very much from the levels that they have started to trade on this year. But again, it's a dangerous game to try to predict prices, especially when you have so much elevated political uncertainty affecting key producing countries. So I will keep my, I will share with you what I believe, but actually with great reservation.
Carole, I'm not an oil expert. That's why I'm talking to you. But I've been watching this program, Landman, recently, and he was saying that, $70 a barrel is a sweet spot for oil producers. So when we hear about these lower prices, what's your take? Are we in a sweet spot right now, or is there a better price from the American side that we should be seeing?
A sweet spot for one producer is a sour spot for another, because not all oil producers are the same. There are those who have limited economic diversification, such as, for example, Middle Eastern producers or African producers, and they need much higher prices than 70 to balance their budget. But there are also the high cost producers, like say if you are offshore, deep water, it's much more expensive in general than onshore. But you mentioned the US producers. Usually we think about the US and oil prices. And of course, this is something that President Trump put great emphasis on in his presidential campaign, that he wanted to keep energy prices low and oil prices low, but not too low, because the US is in a really interesting situation. They are a major consumer of oil. And, sometimes people tell you that the popularity of a president depends on oil prices, if they are high or low, at least gasoline prices at the pump. But the other interesting position of the US is that it is the largest oil producer in the world, and primarily through shale. So you also want to keep your very important industry very healthy, because it is that industry that gave you this kind of energy dominance that the US is pursuing, especially under the current administration. So yes, low oil prices are good, but not too low, because otherwise you're going to squeeze out your very important industry. So somehow a balance needs to be achieved between keeping consumers happy, but also keeping American producers happy. And so far, and again, nobody can know for sure what is that sweet spot, but the prices that we saw last year, around the $60 a barrel, or 60 to 65, I would say it kind of kept everybody happy-ish, content, I would say. So deviate from that, you will end up upsetting one party for sure.
And that was just a sneak preview of our business podcast, The Dip. But if you want full episodes and you want to subscribe, then you know what to do. You just scan that QR code that's on your screen right now.
But for now, thanks for watching our show, The Dip.
Thanks for watching. Bye-bye. See ya.